Hi, it's David Pryor again from Priority Funding and Forward Funding. We've been doing a series on frequently asked questions. Today's one is a very different type of model. We're talking specifically about the loan process. How do I go about getting the loan? How does that go through the process with the lender, through to settlement, through to paying, through to access to funds? Okay, so basically when we're looking for funds, we need to ask the right questions to understand the type of product we're looking for, whether it's equipment loan, whether it's unsecured, whether it's property, whatever it may be. These also they sound obvious, but these are important steps to understand. So I normally will ask the questions, find out what you're doing, find out why you're doing it, find out the industry, is this the best facility for you to use? Most of you know what you're doing, but asking questions helps to open up the mindset to see if there's a better way of doing it. Okay, from there, we send you the application process. Now, we have PDF processes for people who like to fill out, and we are launching our online application, which will allow people to complete the form online. Directors then get a separate email with the Privacy Act and their privacy search, so that it ensures your protection is fully in place when you do the application. We find out what type of loan, we find out how much you're looking for. If it's an invoice for equipment, we do that side of things at all. So once we've acquired that information, and within that information may also be bank statements links, because that's the way the industry's gone now, where funders like the clients to click on a link and to provide bank statements with an analysis of it, so that they can see whether you're actually keeping your payments up to date. So once we receive the application, we'll assess it and figure out which is the best appropriate lender, okay? Whether that be a bank, whether that be a finance company, whether that be a mortgage, whether that be a private lender, whatever it may be, we then come back to you and say, this is the way we're going to do it, okay? And remember, this is all business lending, not consumer, okay? From there, most of the lenders we deal with have an online portal, so we will load that data directly onto the online portal, which allows us a quick access to load it in and to find any inhibitants to the transaction moving forward, okay? So that might be there's a credit issue, that might be there's not enough data and the privacy hasn't been done, the ID is not provided properly, anything along those lines. But we manage all of that. You basically sit back and say, Dave and your team, what are you guys doing? And we try and give you that answer as quickly as possible. So we've loaded that transaction in. I normally say allow 24 hours for up to $150,000, $200,000 worth of lending. Okay, that's usually the threshold for what they call low doc lending, and if we provide all of the information up front, they can do their analysis quickly. Now, 24 hours can be 2 hours if they're not busy. It can be 48 hours, 72 hours if it's end of month or there's a natural disaster or something is happening which just slows everybody down. But assuming it's done quickly, they provide me and my team with an approval saying, yes, it's approved for this amount over this term. These are the payments. This is the process we go ahead and do. We then let you know if it's an invoice we need to get for equipment. We will verify the banking details via a banking slip from the supplier to make sure that anti-fraud laws are actually being held nowadays. We get the invoice made out correctly so that we can actually pay that directly. If it's an unsecured loan, we will then send you the link to actually click on and do the DocuSign. So most lenders now, they are DocuSign. So once we've processed through to documents, the documents are emailed to the directors, whoever are relevant to sign. Sometimes that's 2, sometimes there's 1. It depends on how many people are the responsible people within that entity, okay? Once they've signed and met their approval conditions, which could be insurance, could be provide ID, could be provide rates notice, could be provide whatever that the lender has asked for specifically for that particular loan. Once we provide that data, it then goes into the settlement portfolio, okay? Settlements again take anywhere between 2 and I say 2 and a million hours, because if everything's not provided, then it can take longer, but anything from 2 to normally a day to settle that transaction. Now, using the equipment example, they will pay the supplier directly. Okay, it's very important that they do pay the supplier directly, so that once the supplier receives their funds, they can release the goods to you. What happens there in the background is there is a PPSR, which is registration of that asset, so the lender has security over that asset. So that's why they pay the supplier directly. They get that serial number or ID number of that equipment and actually register that equipment. On an unsecured loan or an overdraft, an unsecured set and forget loan, they'll drop that money directly into your bank account. Okay, you give your banking details as well as your direct debit details. They put that money into your bank account. If it's an overdraft, it sits in the facility within that lender. So use Shift or Prosper or any of these lenders. It sits in their account. You have a link to access their account under your profile. You then draw out a portion of what you need. You then set that up within your normal banking, Westpac, ANZ, whoever you're with. You actually then arrange to pay them. Your direct debit will pay the minimum amount, but you pay larger portions, as I've said in other videos, to actually reduce your principal on a daily basis. But after that, then your direct debits are taken out on a monthly basis. You might have noticed I've said direct debit, direct debit, direct debit. When we first started in finance 30 odd years ago, it was invoice, invoice, invoice. Direct debit was almost never thought of. Then in the 2000s, pretty well 80% of all transactions went to direct debits. Now, almost every corporate pays direct debit. It is simply a minimum requirement by lenders to say, I want to control, as in the lender wants to control, knowing they can take that $200 a month out of your account without waiting for you to release the funds. Okay, so direct debit is always the way it's done. Now, from there, you then have your term of your finance contract. Okay, and that's when the transaction has settled, everyone's been paid, everybody's working well, you're using money well, you're using the equipment well. Now, ensuring you keep your payments on time, not delinquent, not missing payments here and there. And as I mentioned in a couple of videos ago, if there's any issues, communicate. If you have a problem, talk to me, talk to my team, talk to the lender. Let's make sure we keep you having a great credit history. So that's been the process of the loan process, how easy it can be. Obviously, if you're borrowing a lot more, we will ask a lot more data, including financials, tax portals, all those other sort of things. But if it's a simple transaction, then it should be simple to borrow, and hopefully you found us nice and easy to deal with. Again, thank you for listening to David Pryor from Priority Funding and Forward Funding. That's the end of this particular video. I'll see you on the next one. Thank you.